Well, alrighty then. So the rates went up. Did that mess you all up? Did that mess anybody up? Did that mess you up if you were going to sell your house? Because now you're like, there's nobody going to buy my house, so just forget it. Were you going to jump into the market because you're like, okay, I think I can deal with the 6.5%. I'll be okay. I'll just figure it out. I'll refinance because everybody kept telling me to, marry the house and date the rate. And now it's at 7%. How the heck am I going to marry a house and date that rate? Okay, so here's the deal. You don't have to date that rate. You can buy that rate down. And there are several ways to do that, but I would like you to understand that this is something that we haven't seen for a while because of the way the interest rates were way below normal. I want you to also understand that those rates were way below normal for a reason. They were to help stimulate the economy. They were to help keep everything going during some very unworldly precedented times. And yes, you could what if yourself to death about, well, I should have done this. I missed my mark. You didn't miss anything. If you didn't do it, then you didn't do it. If you didn't sell your house, you didn't buy a house, then that's okay. It's done. We're going forward. We don't have to think about the past. Let's just move forward. You cannot change anything. So there's no need to sit there and worry about what you didn't do or what you wish you would have. We're just going to move forward. So that's the only way that you can handle anything. There's no sense in dwelling on anything that you did or didn't do that was yesterday or even a year ago or 6 months ago. All we can do is what's today and go forward. And I'm going to help you do that. Here's how. Discount points is probably something either you don't remember, don't know about, or like, well, that sounds very complicated. And it kind of is, but not really. I'm going to break it down real simple for you. And there's lots of levels to it, but I'm going to break it down really quick. And then I will tell you this. If you want more information about it and you don't have a lender, I can get you a lender. I can recommend you a lender. And I also have several lenders to choose from. Or you can have your own lender. That's totally fine. I happen to have, a couple of different lenders. There's also, if you think you might need some buyer assistance, I have information to OHFA, and they have a list of lenders that they work with to work with the buyer assistance for 3.5% buyer assistance down. So there's those options. Now, let me tell you really quickly about what a discount point and buyer down. So your bank says, okay, for no extra money, your rate, we're just going to do very simple rates and very simple math, okay, is 7%. So they come in and say, okay, today's rate is 7%. If your house that you want to buy is $300,000, and that's the contracted amount, so that's the offer, that's what the seller would accept, okay, $300,000. A discount point, if you wanted a rate that, and we're going to use simple math here, and we're going to say that a discount point is equal to 0.25%. It's not always 0.25%. So I need to make that little disclaimer here. Most of the time it is, but sometimes it could be 20%. So sometimes it could make it come down to, instead of 6.75, it could make it 6.8. Okay. So there's that. It just depends. That's why your real estate agent needs to be in good contact with your mortgage lender and needs to say, okay, what's the discount point? What would that bring it down to? What's that amount? Needs to be able to be very clear and keep very good information so that when that contract is sent to the seller, well, to the agent that goes to the seller, that it's all clear and they know why. And that your agent will speak to the other agent and go, hey, this is why it's sent this way. They need this to be so that they can get this right. Okay? So, but we're going to do simple math for this one. Okay? So, $300,000 house, one discount point will equal $3,000 because the discount point is 1% of the contract amount. Okay? So $3,000 will buy down 1 point equal to 25% of the percentage. So, instead of 7%, you're going to get an interest rate of 6.75. Well, gosh, If I can get it down to 6.75, how about 6.5? That would really help me. That would help just even that little amount will make my mortgage payment just a little bit better. And that way, in case my insurance goes up next year or taxes go up just a little bit and I don't get a raise next year, that will help me. Okay, so 2 points. So then you need $6,000. So then your real estate agent can say, seller to pay $6,000 towards 2 points buy down interest rate. And that would be on the financial part. And that's how that works. So it would be seller credit of $6,000 towards the buy down interest rate. That's how that works. Now, does that mean they have to agree to that? Of course not. But that will help. And sellers, your listing agent, this is another thing. As a listing agent, I am going to be talking to my sellers and saying, listen, with the interest rates as they are, we need to look at your asking price and what the comps are, and we need to look at them and we need to price accordingly. But we also need to give a little bit of room for some seller concessions for some buy down points. And that's how you have a real estate agent that will help buyers come into the market. And that's how, as a buyer agent, you will help buyers get into there. So if this makes sense to you, then awesome. You want to go ahead and jump on in and let's get going, then call me. And if this doesn't make sense to you and you're like, I have no idea what you're talking about, that went right over my head. And it's not because I'm not smart. It's just because that was completely foreign to me. I can spell everything, but math is not my strong suit. I'm the opposite. Spelling is not my strong suit. Then call me and we can go have coffee and I can write it all down and we can go bit by bit, and we can go talk to a lender and then they can help. We can bring this all together because I don't want you not to be informed and I don't want you to be scared. There's nothing to be scared about. This is just a transaction and it is just we just need to break it down to where that you can understand it all and understand that this is how you get started in being able to build not only your future in owning a house, but also the beginning of your wealth building. But you keep paying somebody else's equity isn't going to help you get started. So I want you to help and I want you to succeed and I don't want you to be scared. The rate is just one thing in this whole big process, okay?